Welcome everyone who will see this in the replay. This is the first webinar from our end this year, and we have a very interesting topic, Bitcoin, the ultimate collateral. We're going to do a presentation today from Firefish's end, and I also want to introduce you guys. Finn, I hope you're okay that I'm going to go with the boss first. Igor, can you maybe give us the little spiel of who you are and what you do at Firefish?
Absolutely. Thanks a lot, Joel, and it's a really great pleasure being here. Thanks for having us. And, just like you guys, I think we have the same mantra in terms of how we look at Bitcoin, through the lens of non-custodial versus, custodial and all that. So we'll definitely go through that. So my name is Igor. I'm the co-founder of Firefish. We're basically a European-based Bitcoin-backed lending platform. We've launched our platform roughly 2 years ago with very, very solid traction. We've been building and shipping new features and functionalities for our users. Since last year, we've launched also the public release, so it's open for all Europeans to join. Very soon, we'll be launching additional sort of services on the product. But basically, Bitcoin-backed lending platform Firefish allows Bitcoiners to do one and only thing, which is never selling your Bitcoin, right? And instead of selling your Bitcoin, we're helping you to lock it in a very secure way, in a non-custodial way, and receive funding in fiat or later on in stable coins as well. So that's what the Firefish platform is all about.
Great. And Finn, give us your spiel.
I'm Finn. I'm maybe also known as Einfach Bitcoin, and I'm basically also supporting Igor at Firefish. I'm like the German educator for Firefish, and Igor said basically everything already. So I think that's it.
Finn is very
perfect.
Humble.
Yeah.
Yeah, stay humble and stack sats, right?
Yes, exactly.
And for the people, obviously, you should know my face if you watch the Relai videos. I'm Joël. I'm the press spokesperson. And as I mentioned, I mostly do the hosting and stuff of everything here. And if you guys are okay with it, I am also going into the presentation right away from my end. So we got this covered. Chat should be enabled now. It was apparently not enabled. And if anyone's got questions, leave it there or in the Q&A box later on. So let's go share the screen. And we'll go into Google Chrome. And you should be seeing my screen very shortly.
Yes.
Perfect. So my part is very quick and dirty. It's the case for Bitcoin and self-custody. If anyone has not yet, found out about Bitcoin or this is your first time, here's a quick overview. And the basic premise is that fiat money is a poor choice if you want to go for long-term savings. As you can see in this very lovely graphic our in-house designer Anna created, between 1999 and 2024, the euro's purchasing power has depreciated by roughly 45%. We went with a little bit of a low number there because it could be even more depending on, when you watch this video. And this obviously makes it unattractive if you want to save for the near future and if you want to have a property and a store of value where you can actually also get more out of it in, let's say, 10, 20, or even 50 years. And this is where Bitcoin comes in, as you see here by the data. This is data from the S&P, NASDAQ, US Census Bureau, and CoinGecko, that it's actually been the best investment of the past decade. It's beaten the S&P index by a multiple. That one returns roughly around 13%. Over the same period, gold, which is usually the standard for, a store of value, has roughly returned 6.1%. Shift years in this belief there. And Bitcoin outpaces traditional asset classes in every spectrum with an average annual return of approximately 60%. As you've already seen last year and this year as well, it's really been on a roll and it definitely has been the investment to watch out for. However, if you want to look at Bitcoin as a store of value, that's one thing. But if you also look at it as a form of money, it's obviously the best form out there. The graphic on the left, I think, illustrates always better how powerful Bitcoin is. In 2020, In 2012, sorry, you had 5 Bitcoins for groceries. In 21, you could buy a car. And in 2030, you'll be able to buy a house. You can potentially even buy a house already now with that amount, depending where you live. And in a world where obviously digital and the global economy is thriving even more, you want to have a scarce asset capped at 21 million coins. There will be not more, and the mathematical process in the background guarantees that everyone is playing according to these rules. No government intervention, no central bank that is basically adjusting and deflating, inflating how stuff works. Bitcoin just operates without any authority there, and the transaction record cannot be altered unlike other coins. But that's a different topic. If you now think, okay, this is your first time hearing Bitcoin, Jesus, I'm too late, the price is exploding and whatever, don't worry. If you look at the overall global state of things, Bitcoin adoption is projected to surge, potentially reaching 2 billion users in the next 10 years. That's a huge number from every aspect of it. And this past year, we had a really special celebration, I would call it, as institutional adoption has also entered the realm. We did see the ETFs. They're not real Bitcoin. We'll get to that in a second. They're paper Bitcoin, but nevertheless, it's also gaining its traction and its attraction amongst more, let's call them sophisticated investors who like to play around with their own strategies a bit. And also the global economic trend obviously is continuing. We may see potential nation states getting in with reserves. We do hear this time in and time out again now. And considering Bitcoin's performance, it's really been the go-to treasury reserve asset to have, whether you want to bring a world onto a Bitcoin standard or just for now, basically saving your currency or your economic a bit easier rather than relying on something like the euro, as we've seen before, that depreciates in its purchasing power. However, you need to be in control of your Bitcoin. And that's the key talking point for us at Relai. You need to have self-custody. And you need to have your coins ready and you need to be the owner of them. Because if you look at this graphic, it's from Chainalysis. Chainalysis always a bit vague with their numbers, but it's still a good graphic to show with the amount of crypto hacks. Don't be triggered by the word. In 2024 alone, 2.2 billion. And as you can see in the graph, there is a lot of data out there that people are losing their money and hard-earned time in, let's call it Bitcoin at this point and not crypto, because they are trusting third parties. They leave it on an exchange such as Coinbase or Kraken or any other thing, Bitpanda if you're in the DACH region. And that is obviously not the right way to hold on to your Bitcoin because it's intended to be peer-to-peer money. So the only option you have is really to understand the difference between Coinbase and something like a hardware wallet. I know we have Ledger in there, please ignore that, but it's definitely also one of the bigger brands. Obviously, there are much more Bitcoin-friendly alternatives out there, and you only hold proper Bitcoin if you also self-custody your coins. You are in control of what you do with that money, whether it's a savings tool, whether it's something else, or whether you actually just want to use it. Move from country to country, all it takes is your 12 to 24 words and you are always in control of that asset. Plus, I think this is not often mentioned, you have a certain accountability where you don't need to trust that third party, or if you want to get involved with a third party, make sure to have someone out there where you can set up something like a multi-sig, we get into this now, where you don't need to basically hand over ownership of your assets and where you can always safeguard the future of your money. In the Relai app, for example, you have this very quick and easy. You have all 12 words. You can also import that wallet to any other Bitcoin wallet, and you never have to worry about trusting the third party. Okay, we got that now. Maybe you've always been bullish on Bitcoin, and maybe you've always had everything in self-custody. But what do you actually do then with these Bitcoin? Because you may hold them, you may have them. Depending on where you live, you know, there may also be certain advantages if you only hodl, so you hold on for dear life and you never sell. However, you may also want to use these Bitcoin and you want to use that as collateral. And that's where I'm now handing it over to the guys from Firefish, because they are now going to show us how to do this in, as Igor said, a Bitcoin respective way. Let's stop the share. And you guys should be able to share your end now as well. And I will cover the chat with any questions arising. And I'll mute myself now.
All right. Un momento. Can you see my screen now?
So yeah, there we go.
Yes, it's coming up now.
Excellent.
All right, sounds good. Okay. Very good. Thank you very much, Joel. I think the worst thing that could happen for a Bitcoiner is that you need to sell your Bitcoin. I mean, for example, if you need to sell the hardest asset in human history for, I don't know, some payments like taxes or car repairment, whatever, you always know you could have just hold onto this Bitcoin and they would very likely appreciate in value. So you know that the purchasing power of yours would increase. And if you sell them, that's of course not an ideal way, let's say. So we always say never sell your Bitcoin. And that's also what the rich people basically are saying. Don't sell your assets. Don't sell the assets you think that are going to appreciate in value over time. And so don't sell your stocks, your real estate, whatever, gold, bonds, whatever. And better you short something, you have liabilities in something that's depreciating in value, that's falling in value. And what's the one thing that's the most likely to fall in value? That's, of course, fiat currencies, as you already mentioned, Joel. On the right side, we can see the fiat devaluation with 2% inflation rate, like that's a black line. And 2% inflation rate is actually what almost every major central bank in the world is aiming for, 2% loss of purchasing power per year. And if you look here, it's like it just takes you 35 years with 2% inflation rate for your purchasing power to halve. And I mean, 2% inflation rate is still very optimistic. And if we go a little bit more realistic, let's say we have a 5% inflation rate, which might even be quite less. It would not take 35 years for your purchasing power to halve. It would take around 15 years. So we're clearly seeing fiat is just a melting ice cube, and fiat is designed to lose value. So it makes sense if you have like many assets or whatever that you create liabilities in fiat, because also these liabilities fall in value. They are your loan gets easier to repay because fiat is depreciating. And that's basically what the rich people are doing. They, for example, Elon Musk, when he bought Twitter, now X, he didn't sell his Tesla stock because on the one side, if he would sold his Tesla stocks, he would very likely create a taxable event because selling your stocks, that's basically in every jurisdiction, that's a taxable event. That means that you need to pay taxes. You have less liquidity to use otherwise, and that's not good. And on the other side, Elon Musk is, of course, thinking, my Tesla stocks will appreciate in value. They keep appreciating in value. And so it doesn't make sense for me to sell them. And so what Elon Musk is doing is he's not selling his stocks. He's borrowing against it. He's using his Tesla stocks as a collateral. And so like the lender who gives Elon Musk money for a credit, he's also interested in it because if he has the loan is already collateralized, there are already Tesla stocks behind it, basically, behind the loan. And if anything bad happens, these Tesla stocks can be sold in the market and the lender gets his money back. It's everything fine, quite safe. So the lender is happy because it's a collateralized loan. It's basically less risk. And Elon Musk is happy because he still keeps his Tesla stocks that keep appreciating in value and he doesn't have a taxable event. So that's actually the logic behind Bitcoin-backed loans. And we're in this webinar because we think that Bitcoin is like the hardest money in human history, I think. Or at least many people here think that. And that also means that Bitcoin is the ultimate collateral. And there are three big major factors for that. I think the biggest one is Bitcoin is digital. That means Bitcoin is indestructible. It's not like you can also use a house for a loan, a backed loan, but the house can fall apart. It has high maintenance costs. You also need to maybe have an insurance against hurricanes, whatever, depends on where you live. It's like very complicated and resource intensive, and that's not good. And Bitcoin is just indestructible. It doesn't fall apart. It doesn't rot, whatever. And also on the one side, Bitcoin is very divisible, like infinitely divisible with different layers like Lightning. That means you can just sell Bitcoin as you want, as much Bitcoin as you want or need, is better to say. And in house, for example, you can't just sell 10% of a house. That's not good. And on the same way, you also have Bitcoin is transparent. So you don't need to trust me. You don't need to trust Joël or anyone. You can just have your own Bitcoin full node running and have your own access to the Bitcoin network and see that the Bitcoin are there. No one is manipulating it, and that's fully transparent. And also, Bitcoin has no storage issues. Like, it doesn't matter if there's a 0.1 Bitcoin sitting on an address or 100 or 1,000 Bitcoin. It's always basically the same. And because Bitcoin is digital, it's easily transferable. Like, it's just, you can just send it via communication protocols like the internet. And in the same way, because Bitcoin is digital, it's also programmable. And that's something that Igor will tell you about something in a few minutes. And another thing is Bitcoin is tradable 24/7. So Bitcoin can be liquidated basically anytime, on a Sunday evening, wherever you live, because Bitcoin knows no banking holidays, Bitcoin knows no vacation. It's always, Bitcoin is global. Anyone in the world is always trading Bitcoin for any major fiat currency. And so you can always liquidate your Bitcoin, doesn't matter when or where. And because Bitcoin is traded anytime, there's also a 24/7 real-time exchange rate. That means that for your house, for example, or your flat, you don't know what the actual current price is. And but with Bitcoin, you know it because it's always traded. And with the Wall Street adoption, the institutional adoption, the beginning nation state adoption, you already have deep liquidity pools. So you can also sell like thousands of Bitcoin right now at the moment, and the price won't drop. That means the price of your collateral, the price of your assets, they don't fall. It's deep liquidity pools. If you sell also large amounts of Bitcoin, it's just a drop in the ocean, basically. And that's quite good. And of course, like you all know, Bitcoin has a fixed supply. That means there's no hidden inflation rate. There's also no CEO, no company behind Bitcoin that can increase the rules, the supply, whatever. So there's no counterparty risk. That's very important. Bitcoin is very predictable. The most predictable thing there is in existence, basically. And of course, the history doesn't really predict always the future. But when we look in the history, the last 10 years, Bitcoin had an average growth rate of around 75%. Like, depends which time frame you take, but that's quite nice, actually. And that's also why I like this log chart. So on the right side, you can see the Bitcoin chart, the Bitcoin price chart in US dollar. And on this side, you can see the Bitcoin price logarithmically. And on this side, you can see the years logarithmically. And Bitcoin is just going upright, basically, just going up. And looks good, I would say. And what Bitcoin does, it's bringing borrowing for everyone. That means, you don't need a credit score for a Bitcoin-backed loan. You don't need a banking history. I don't care for that, because Bitcoin you already own the hardest asset in human history. And if you can send these Bitcoin, you own them. And that's the most important thing. So Bitcoin Bitcoin enables backed loans for everyone. And because it's digitally, it means that borrowers and lenders can connect from anywhere in the world. You don't need to exchange physical goods or anything. So that's quite good. And in the end, Bitcoin is like, it's Bitcoin-backed loans backed loans for anyone. So not just institutions, not just high net worth individuals. Anyone can do it, even if you just own 0.1 Bitcoin. That's actually something that wasn't able before, but doable before. And as you might know, there are some different ways to implement Bitcoin-backed loans. And the most common thing that Joël already said is like the custodial solution, the centralized solutions, and they just work. You give someone some address, some company your Bitcoin, you just send them to them, and that's basically it. You just need to hope that they resend you the Bitcoin, but you can't know it because you have this counterparty risk. They might do stuff with your Bitcoin, for example, BlockFi or Celsius. We all know what happened there. They did rehypothecation, for example. That means that they basically do fractional reserve banking. They lend your Bitcoin out to other people, and when they lose their Bitcoin, your Bitcoin, that's not good. So centralized lending models maybe aren't the best thing. And also it's an ineffective price model because it isn't a free market. So the price discovery for the interest rates is also centralized and not market driven. And then we have like this DeFi protocols, this decentralized finance protocols. And for example, Coinbase now in the US launched their Bitcoin-backed loans program. And what you're doing there, basically, you're sending your Bitcoin to somewhere, and into this Bitcoin, somehow something happens to this Bitcoin, you get on a different chain, and then this Bitcoin gets somehow sent to somewhere, and you get dollar back in some synthetic dollars. We have stable coins, for example. So you don't really know what's happening in the middle. It's just Fugazi, basically. And you're changing, you're wrapping your Bitcoin, whatever, and wrapping your Bitcoin like they do at Coinbase. That's actually in many jurisdictions a taxable event. So that's also not good. And these stable coins are DeFi protocols. They have different protocol risks and vulnerabilities that you might even don't know of. And that's also why we would say that DeFi protocols maybe aren't the best solution. And that's why we have at Firefish have a different approach. We do the non-custodial approach. That means that we just take Bitcoin. It's just Bitcoin native. That means the Bitcoins stay on the blockchain. They are visible all the time. And they are, we don't use wrapping. We don't use different blockchains. And it's all just Bitcoin just sits there in escrow on the blockchain. You can see it yourself with your own node. So you don't need to trust anyone. And there's no single party who has access to your collateral, and there's no single point of failure. And wait a moment, I need to drink something. Very good. Yeah, that's basically it. We at Firefish doing the non-custodial part, the non-custodial solution, and how exactly our protocol works. That's something that Igor will tell you now. So thanks for listening.
Excellent. So thanks a lot, Finn. So let me share my screen as well. I'll carry on where Finn stopped. So let me please know if you can see see the slides.
Yes, we can see them.
Excellent. So yeah, as Finn mentioned, there are a couple of models on how to handle your Bitcoin as a collateral when you're basically using Bitcoin as a collateral against a loan. So instead of selling your Bitcoin, you're taking a fiat loan, and obviously then you either repay the loan or roll it over. But it really is very important to understand what is actually happening with your Bitcoin. As Finn mentioned, for example, on DeFi platforms, there are particular risks related to the protocols, particular risks related to wrapping, bridging, and so forth. Custodial, sometimes we call the custodial models as trust me, bro, meaning you deposit your Bitcoin to someone, and then you really just hope that your Bitcoin is gonna go back. So what we've developed in Firefish, and that's really the core of our platform, is something what we call a Firefish protocol, basically. So I'm gonna spend a little time going through the details of the Firefish protocol. Obviously, at the end, we can look into some questions about it. What is very important about our Firefish protocol is that it's built on Bitcoin blockchain. So it is a native protocol built through and using components that are native to Bitcoin blockchain. In particular, these are the multi-sigs. We're using 3 out of 3, details later. Partially signed Bitcoin transactions, meaning that you actually can pre-sign particular transactions. So you are actually limiting or sort of setting up the way Bitcoin can be spent in the future. And time locks, which are literally just time locks that are locking potential transactions at a particular time in the future. So how the protocol basically works, I mean, you as the borrower, you generate what Finn was describing, the escrow address. So that's the address that actually holds Bitcoin during the duration of the loan. So this is done on your side. It's not Firefish who is generating this particular address. We are only checking if the computation basically behind the code was same as on the side of the borrower. Once Bitcoin is locked, and this is also very, very handy, once it's locked, you do not have to interact with blockchain anymore, right? So there are definitely different alternatives to Firefish. In some cases, you actually do need to add additional signatures. In the future, you need to sort of store your keys, for the future and all that. So we've built this protocol, with this particular idea on our mind that we want to make it as easy as possible. So once you go through the locking process, you do not have to interact with blockchain anymore, and you then just, after you repay the loan, receive your Bitcoin back. What is also very important, what the Finn mentioned, is the no rehypothecation, right? So especially with centralized or custodial solutions, very often your Bitcoin is actually lent to someone else, and if that particular company goes belly up, or institution, then obviously you are at risk of not getting your Bitcoin back. So with Firefish protocol, this is very important component, and there's no rehypothecation of collateral taking place. And then the last piece, which is also very important. I mean, you might argue like, okay, so what would happen if someone disappears, if Firefish disappears? You know, what if my Bitcoin gets locked forever on the blockchain? So we also added a very special feature, which is available to the borrower, which we call zombie apocalypse scenario. So it's literally a transaction that you as the borrower can broadcast on the network, on blockchain, to unlock your Bitcoin after some time in the future. So imagine at the end of the contract, you know, everybody would disappear, Firefish would disappear, the whole infrastructure would disappear, but you still are holding a transaction that is actually using the time lock that you can broadcast into the network and unlock your Bitcoin back. So we've been also thinking about this kind of scenario. So you do not have to be worried if Firefish disappears, you know, who is going to get you your Bitcoin back. So Bitcoin will never stay locked. Now, putting all these things together, how the actual logic of the escrow works. Let me just minimize the windows here. Okay. So once you lock your Bitcoin collateral on the on-chain escrow address, so that's the place, that's the address that you can also check on the blockchain explorer where Bitcoin sits. You are actually pre-signing a couple of transactions that are limiting the way Bitcoin can be moved from this on-chain address. And there are only two ways or two directions or two addresses Bitcoin can be moved. The first one is the borrower's address, so returning basically your Bitcoin back to you. And that's usually if you repay your loan, or as I mentioned, during the zombie apocalypse, if everything goes, you know, belly up, you can use the recovery transaction and you are withdrawing your Bitcoin back to you. And then the other address or the other direction where Bitcoin can be moved is the so-called liquidation address, right? So in case the borrower, for example, takes a loan and at the end of the loan term, they wouldn't repay the loan, then obviously this collateral would get liquidated by a liquidator, right? So this Bitcoin collateral would be then actually moved to this liquidation address. And there are two instances where this can happen. It's at default, again, as I mentioned, meaning at the end of the term, you are not actually repaying your loan, or in a case which we call price liquidation. Price liquidation is basically if the value of the collateral that is actually securing the loan decreases to a particular level where it's insufficient to cover or secure the loan. Because obviously we need to think about the investors or the lenders who are actually giving or providing you with the funds. So in order to secure, this interaction and make sure that lenders will not lose their investment in the Bitcoin-backed loan, we also need to check what is the actual value of the collateral stored. So in case, for example, Bitcoin would collapse 50%, Bitcoin would get liquidated, and all these proceeds basically liquidated by the liquidator. So it would move from the on-chain address to the liquidation address, and the liquidator would repay the investor himself. There are obviously more details to how the protocol works. So if you are a bit more technical, you can definitely check our document hub where we have all the details of the transactions, how the escrow is created, what are the outputs or those four paths as I just described, as you can see on the what we call a squid, escrow squid, where you have only four outputs that are pre-signed, and Bitcoin really cannot move anywhere else. So there are sometimes questions: can anyone steal Bitcoin from my escrow? Actually, they cannot, because they do not have the access. And even if some the worst case scenario would happen, Bitcoin can be only moved either back to the borrower or to the liquidator. So really the process is minimizing risks for all the parties. I will stop here in terms of description of the protocol itself. We are going to have a quick look at the platform just to show you how the whole process works. And obviously at the end, if you have any more questions or any questions about this, we can or we'll be happy to answer those. So let me just switch back to our platform. Finn will be my Padawan helping me with the deal. So we're gonna be demonstrating the functionality on our test environment. So as you can see, this is basically the platform where you can obviously register. You would have to obviously, due to the nature of the business, pass standard KYC. No blood samples required. So it's really a very, very simple standard process. And the platform itself actually allows you two things. One thing is borrowing against your Bitcoin. The other thing is investing in Bitcoin. I'm going to actually go back to my slide where I'm going to describe a couple of steps before we jump straight to the platform. of how the platform itself works. So sorry for fiddling between these slides and screens. So what is a Firefish platform? Here we go. These are the slides. So Firefish Platform, as I've shown you, is a Bitcoin-backed lending marketplace. So when we say marketplace, we mean that we are actually just a marketplace that is connecting borrowers, so Bitcoiners who want to get fiat liquidity or stablecoin liquidity in the future, with investors or lenders. So these are people who have euros or dollars or other currencies, and they want to invest their free cash basically into Bitcoin-backed loans. So on the marketplace, you can act as a borrower. As I mentioned, you obtain fiat or stablecoins while using Bitcoin as the collateral, or you can become an investor if you have free cash. You know, hate it or love it, we still live in fiat economy, so we all have to use fiat at point in time, and we do have most of us would have some fiat savings. So instead of keeping your fiat in a bank where you get 1%, 2%, 3% at the best. You can actually invest in Bitcoin-backed loans because they're over-collateralized, they're very secure, very liquid, and the interest rates are definitely higher or much more attractive than in a standard bank. So, and then the core, as I mentioned, is the Firefish protocol. As you can see on the diagram, we have a borrower, we have an investor. So investor is sending money to the borrower returns the money to the investor, and then borrower is locking a Bitcoin on the on-chain escrow. In case they default, in case they do not repay, the money would be sent back to the investor. So borrowing against Bitcoin, there are a couple of important things to mention. First and foremost, it's a peer-to-peer model, meaning there's no central entity, no central institution or a bank or a fund that would be distributing the money. So it's always two particular people that we're connecting, so the borrower and the investor. Borrowers have access to standard loan or instant loan. Standard loan is literally the loan where you say, hey, I want to borrow 5,000 euros for 12 months, and I'm going to accept 10% interest rate, and your request will be posted in the marketplace. Instant loan, these are loans when you really need the money quickly, so you can, instead of waiting until an investor picks your loan request, you can actually request an instant loan. This is actually like I would say mini fund that is distributing the money immediately. So if in case you need this money immediately, you can use the instant loan. The interest rate obviously is fixed and is usually higher than the market rates. But if you really need the money immediately, you could use the instant loan functionality. Currently, we support the tenors 3, 6, 12, and 18 months. Important point to mention is the collateral to loan or loan to value ratio, which is 2 to 1. So if I want to borrow 10,000 euros, I would need to deposit 20,000 worth of Bitcoin. And this is obviously due to the volatility of Bitcoin as an asset. If Bitcoin, is kind of collapsing, we would need to make sure that the investors' investment and their fiat basically is secure. So that's why it's always 2 to 1. The loan repayment is a one-off, so it's very simple. You take the loan and repay it, and the maturity, you do not have to kind of think about monthly payments or anything like that. And on top of that, you get automated notifications about actions on the platform. Obviously, we have support. And what is very important, as I mentioned, if Bitcoin price starts collapsing, in order to avoid potential liquidation, you can very easily top up your collateral, meaning you can deposit more Bitcoin into the escrow, so your collateral to loan ratio would go back to the healthy levels. In terms of the process, so the process is pretty simple, I would say. First, as a borrower, you submit a loan request when you specify the amount, the currency, the tenor. Then you get matched with an investor. So investors would actually get a notification on the platform like, hey, there's a new opportunity you might be interested in. So once you get matched with the investor, you lock your Bitcoin. Once you lock your Bitcoin, investor gets updated like, hey, you can send money to this particular person. They will see the bank account, and that's where they send the money. So you receive as the borrower money to your bank. And then at the end of the maturity, you literally just repay the loan back. So the process is pretty simple. We're going to go through the platform very soon. And the flip side of the marketplace is investing in Bitcoin-backed loans. So investing is literally even more simpler than borrowing, because as an investor, your only role is literally to pick an offer in the marketplace. So you see all the listings, with all the loans requests listed in the marketplace, the one that you like the most in terms of the period, interest rate, or the amount. You just pick, and you can process the payment directly to the borrower once they lock their Bitcoin. Same applies to the tenors, loan to ratio. Investment is redeemed at maturity, so at maturity you will receive your money back. And then one important point, and as we were discussing liquidation, there are two liquidation options. One that we call self-liquidation, the other is Firefish liquidation. Self-liquidation means that in case the borrower doesn't repay the loan or Bitcoin price collapses to a particular level of the loan to value of 90%, you will receive actually the Bitcoin collateral with a 5% discount, right? So at 95% loan to value, if borrower doesn't top up their collateral, you would receive as a self-liquidator Bitcoin to your address. In case you are not Bitcoin native, which I doubt, our visitors here wouldn't be, but in case you do not want to fiddle with Bitcoin, or you have friends who are non-Bitcoin native and don't have wallets, you can actually opt in for Firefish liquidation, meaning Firefish would liquidate the collateral on your behalf and repay you back in fiat. So that's about it. So now, in terms of the process, as I mentioned, browse through the marketplace, pick and confirm the investment that you like, send the funds to the borrower's bank, and then receive funds at maturity. So I can tell you, even my mother, who's not a big Bitcoiner, is using this because the process is really very simple. And the only role of the investor, as I mentioned, is to send the money and confirm the receipt of the money back. So now let's go back to the platform. I'm going to share my screen. I hope, Finn, you're ready for the test.
Yes.
Excellent.
So Finn is going to empty his next 2 months' salary or what?
Something like that. Okay, 1 second. Share my screen. Here you go. So as I mentioned, first after the registration, this is the homepage where you have the borrow and invest sections. And once you have a loan or an investment, you would have two additional items, which would be my loans and my investments. On the right-hand side, this is a demo environment. That's why, these are not real figures. But on the right-hand side, you would see all the last 10 deals that happened in the recent past, the total value processed in terms of Bitcoin. Now we're already at around 550 on the real version, and obviously the Bitcoin price. So let's go through the borrowing process. So I'll just click on the borrow tab, and the only thing I need to do is request a loan. Here you would have also, if you're the first time on the platform, those four steps explained. So what I'm going to do, I'm going to request a loan. As I mentioned, you have an option, instant loan or a standard loan. So I'm going to go for a standard loan, and I'm going to borrow 21,000 euros. And I say, I need this money only for 6 months or 12 months, whatever. And I think the best interest rate that I'll be able to accept or willing to accept is 10%. So that's that. On the right-hand side, you see when the loan will start, the loan amount, the interest rate, the amount due, which is the interest rate plus obviously the loan amount, and also the fees and Bitcoin collateral. So this is the total amount of Bitcoin that I'm going to be depositing as the collateral for this particular loan. So I'm going to submit my loan request. I'll go back to the dashboard, and I see that my loan has been listed in the marketplace. So I can actually switch to the marketplace, and I see all the other deals that are posted by all the other users on the platform. And I can see obviously inside here, this is my particular deal, 6 months, or request 6 months, 10%. I can obviously cancel, or I can keep it as it is. Now, obviously, in the marketplace, you can also use the options to filter only the deals that you're interested in. And you can see also the active requests or the completed requests, right? So these are all the deals in the past, and these are the all active requests by the borrowers on the platform. So, Finn, if you would be kind and pick my deal. So Finn basically now will go to the marketplace deal because he likes the interest rate, he likes the amount. So let me know, Finn, once you're done.
Yes, I'm done.
Excellent. So I'll just refresh my page, and once an investor actually picks your deal, you're gonna get an email notification, so you do not have to worry that you missed anything. So I see also on my homepage now I have a new loan request that has been matched with an investor. So I'm gonna go to the details. These are all the details of the loan with the details on the Bitcoin collateral. So I can reject the loan if I don't want to, but I'm gonna accept it this time. I'm accepting the loan offer.
Yes.
So now what I'm going to see again is a summary of the details of the deal in terms of the amount, in terms of the maturity date, loan provision date, and so on. And I will also see the bank transfer information. As I mentioned, this is a peer-to-peer marketplace. So literally people, just like in Bitcoin, people are sending to each other's bank accounts the loan amount. So I'm going to accept the loan terms. Everything is confirmed. I can obviously double check all the details. And once I sign basically the agreement, which is just what I did, I'm going to move to the next step, which is basically locking Bitcoin. So let's go. Let's go through the locking Bitcoin process. First thing you need to do is just to add your password. This is just for security reasons. I'm going to confirm that. And then in the next step, I'll go straight to the actual locking process. The first thing that I will have to add is my Bitcoin return address. So this is actually the address that I will use, or Firefish basically will use to send my Bitcoin collateral back. So this is going to be the address that should be definitely in your custody, should be your own address. You should have the keys to them. This is your address. Definitely not recommending using an exchange or anything similar. Ideally, really self-custodial return address. So I'm going to just copy and paste my return address here. So that's from my Relai app. I'll submit. I can actually double check whether I've copied the right figures. There you go. Confirm and continue. And now this is the step in which I will be locking my Bitcoin. So I can do two things. Either I'm going to scan the QR code, which will be sending the Bitcoin, or I can copy paste the funding details into my software application, let's say. So I'm going to copy this funding address. I will actually send it to Finn for demo purposes. So here you go, Finn. I'm going to copy also the Bitcoin amount. And basically imagine that I have now copied the funding address and the Bitcoin amount to send to my, let's say, software wallet or you know, my basically device that I'm using for storing my Bitcoin, and I'm processing my transaction. There you go. Bitcoin has been sent. Now we're just going to be waiting a couple of more seconds. There are a couple of operations done on the back end of Firefish. This literally would take only 3-5 seconds. And once ready, Finn is actually doing his magic on the back end right now, so that's why it takes a little more than 5 seconds. But normally this step is really quick. The one thing that I would highlight also, as you can see, the important kind of notice: do not trigger fee bump or replace by fee. So in case your wallet supports replace by fee, do not do this. If you accidentally send a less amount, we would notify you what to do next. There we go. So everything is signed. Finalize your escrows. The only thing I have to do, complete setup, and my Bitcoin escrow is completed. Now, what's happening actually? So as I've sent my Bitcoin to blockchain, we would need to wait for 2 blocks. So now it's the turn of the miners to basically, mine my transaction, because as we discussed at the beginning, we are locking Bitcoin directly on chain, right? We are not sending it to a custodial. We're not, doing the wizardry with Ethereum or other chains. So we are locking Bitcoin directly on blockchain. That's why this particular step might take from a couple of minutes potentially to a couple of hours. But normally, as we know, the blocks are mined on average in every 10 minutes. So literally, I would say on average by 30 minutes, this process should be done. So let me just refresh. Let's see whether we're done. Excellent. So Bitcoin has been confirmed by the miners, and now I'm waiting. I'm in the process or step of payment confirmation. So what happened? Finn now received a notification that, hey, Igor has locked their Bitcoin, and it is in this particular address. Now you can send him money to his bank account. So this process, again, as it's a bank transaction, can take from a couple of minutes. Actually, the quickest loan that we've ever processed took 15 minutes from the loan request through Bitcoin locking process, banking transaction. So everybody was online at the same time. So the 15 minutes, that was the fastest deal ever. Normally, this could take 1 or 2 days, depending on the investor's availability, when they process the payment, and so forth. So I'll go back, and again, once the investor sends the money to my bank account, I'm going to get a notification because they will confirm on the platform, yes, I've sent the money, so I can see that investor has initiated the transfer. So I'm going to have a look again on the details. And this is just to confirm that I have received this 21,000 euros to my account. I will just confirm, yes, money has arrived on the account. There you go. And I can go back. So now I can see that my loan is active. I can see when is the maturity date, the loan amount, the interest rate, and all the other details. I can also see the collateral. So here, as this is actually demo environment, I will not be able to show it to you. But if you click on this link, Blockchain Explorer would open and you would see exactly the amount of collateral that you've sent sitting on that address. So at any point in time, you can double check whether Bitcoin is really sitting where it's supposed to be, and it always is.
Yes, I also sent more Bitcoin than was required.
Exactly. So in terms of the collateral, you can always, we are displaying here the collateral health, meaning what is the health of the collateral? Do you have enough? In other words, do you have enough collateral on the escrow or not? If not, obviously you would get a couple of notifications and you can top up collateral. Now, one thing I can also do, I can check the loan documents here in the loan actions menu. So I can see the loan documents. I can see my return address. I can top up collateral. As I mentioned, this would be the same process as we went through. And there are some other features such as request early repayment. So normally 1 week or actually 2 weeks before the maturity, and then 1 week and then a couple of days before the maturity, you would receive email notifications that, hey, your loan is about to mature. So you should start considering repaying it. But what I can also do is request an early repayment, meaning, hey, I need my Bitcoin. I want to, I don't know, wrap it somewhere else. So I can actually request an early repayment. We're going to show it to you just for sake of making this a little faster. So I'm going to request an early repayment, and Finn now received a notification that, hey, this particular borrower wants to return your investment back to your account. So we are just waiting for Finn to confirm that he is actually ready to receive the money.
I am.
What I'll do, excellent, Finn has confirmed. So I'm going to, again, look at the details. I can see the borrower detail, sorry, the investor's details. I can use the QR payments, which are not working very well, honestly, with euros, but with some other currencies that could be possible. And I see also my return address. So what I would need to do right now in this particular step is actually taking the bank account, taking the identifier and the amount to repay, and send this amount back to Finn's bank account. So once I do it in my banking application, let's say, I will confirm, yes, I've sent the money back. And now we will wait for Finn to confirm that he has received the money. So as you can see, it's like a ping pong process. It's a peer-to-peer process where there's always ball on someone else's side, right? So once it's borrower, then it's investor, then it's again borrower, then investor, and so forth. So I have confirmed that I've sent the money back to Finn. And let's see once Finn confirms that he received the money. So loan repaid. Again, I would receive a notification that loan has been repaid, and I see that basically my collateral will be returned soon. Normally, the collateral is processed, the return of the collateral within 72 hours, but it's usually in a couple of hours you will get your Bitcoin back. And once repaid, and in closure, here we go, and my loan is closed in here. So this is how a closed deal looks like. So my Bitcoin has been returned back, and obviously I have repaid my loan. The final thing that I'm going to very briefly show you is investing part, because this is really, really very simple. So as I mentioned, you go to the invest part, you can filter down, the currencies you're interested, the tenor. So for example, I only want to lend money for a very short period. So I can see, this is nice. 9% interest rate. That's the biggest interest rate that I can get. So I'll just go to investment details. These are the details of the loan, and I click invest now. Here, this is the liquidation, as I mentioned. So there are two options. Either I would use Firefish liquidation. So in this case, Firefish would handle the liquidation process on my behalf. Or if I want to, in case of a liquidation in terms of price liquidation or default, I want to do it myself. I can trigger this button, and in here again, I would add my Bitcoin return address. I'll just use any random address. So this is an address where I would receive my Bitcoin in case of liquidation, and there you go. So these are again just the summary details of the loan. I confirm, and what would happen? The ball would be now passed to Finn to log the Bitcoin, and we would go again through the very, very same process. So the only thing that I would do right now, I would get a notification that Finn has logged his Bitcoin, and I would just process the bank transfer. So that's that. I will stop here. I think we've covered a lot of content on the platform. Finn, anything else you think we should add?
I think we can maybe liquidation, but we can then go to the Q&A part.
Okay, so let me go very briefly through the liquidation process, because I think it's an important component of the liquidation. So I'll just repeat it again. Collateral liquidation. Here we go. So as we discussed, collateral liquidation is basically a process that is securing the return of investment or of investment of the investor or the lender. So there are two cases when the liquidation can happen. A is the default, where borrower doesn't repay the loan at maturity, doesn't return the money, or the price liquidation, which is triggered when the Bitcoin price falls to a particular liquidation price, right? So this is the 95% of the loan to value ratio. And as we discussed, there are two models. One is the self-liquidation. So this is for Bitcoin native investors. So they will receive the Bitcoin directly into their wallet. Or you can do the Firefish, or you can use the Firefish liquidation, where Firefish manages the liquidation on behalf of the investor. So basically, Bitcoin would go to a liquidator, and liquidator sends and has a legal obligation to send the money to the investor. The one final thing, price liquidation, which can get sometimes confusing how it actually works. So I'll show you a very quick example of a price liquidation. So imagine I take a loan of 10,000 euros at 10% interest rate. So altogether, I will have to send 11,000 euros basically to the investor. For that, I need to deposit, as we discussed, twice the amount of Bitcoin collateral, right? So that's 22,000 worth of Bitcoin. If the Bitcoin price would start falling, I could still top up. So as I mentioned, the LTV, the level at which the liquidation happens, is at LTV 95. So that's the 11,500. So in case the price of Bitcoin would start collapsing, which would be more than 40, 45, 50%, and it reaches the 11,500, collateral would be deemed as liquidated. So this is when the liquidation happens, and depending on the liquidation model, Bitcoin is sent to the investor or is sent through the Firefish liquidator, and Firefish liquidator sends the money back to the investor. So that's a very quick crash course on the liquidations. I'll definitely stop here. As I mentioned, I think we've covered a lot, and I think, Joel, we are happy to answer any questions.
Yeah, perfect. Does it work for you guys if we go for like 25 minutes, so we finish at like 6:20?
Absolutely.
Sure. Perfect. I think I have a really interesting question right away. What happens if a borrower transfers funds to the lender for repayment, but the lender does not acknowledge or approve the repayment? Do you guys have a system in place?
My favorite question, exactly. These are the basically resolution procedures or cases when really one party, as it's a peer-to-peer, we cannot see borrowers or lenders like bank accounts, so we need to rely on their inputs, right? So in case one party, so borrower sends the money back, investor doesn't say anything. In case this happens, we have a resolution procedure that actually then checks both parties. Like, okay, first in the first round, we check, hey, borrower, confirm that you send the money. Hey, investor, confirm that you have received or haven't received the money. So there's a couple of rounds of this kind of resolution procedure, and the resolution procedure would definitely not stop until it is clear what happened to the money, right? So I'm not going to go through all the details. We have it also on the document hub described, but there's definitely a procedure where we are checking, what happened to the payment. Honestly speaking, we've processed thousands and thousands of transactions, and it never happened for the time being until now. I mean that someone wouldn't confirm that they've received the money. We can imagine that it could happen, but for the time being, so far so good, I would say. But there's definitely a procedure well described that helps both sides with this.
And then we got a number of questions throughout the call, like what if my specific banks asks me for, the money transfer, for details and these kind of things. I could maybe say from my end, that's the way the fiat world works, unfortunately, with AML rules. They want to get specific details at a certain threshold. But do you guys also have experience if this happens like regularly? If, like maybe they're sitting in Switzerland, someone is sitting in Czech Republic. What is the process there, roughly speaking?
Yeah, I mean, as you mentioned, if there were rules, we would be very happy to kind of follow the rules and understand what those rules and regulations are, but they're not. Every single bank does it their own way. Certain banks require confirmations, others do not. Certain banks process the payments immediately. Some first ask you, what is this payment? So unfortunately there's no rule of thumb, but as a borrower or an investor, what you can do actually from the platform, you can download a statement that says, hey, I've taken a loan through Firefish, which describes, and this is the bank account of the counterparty, this is the amount, this is the date of the transaction. So you can actually provide these documents to your bank. In 99.9% of cases where we did have users asking for this was good enough for the bank, right? So it's not an illegal activity. They just, if they're usually what banks do, they follow your activity and follow your sort of history. And if suddenly there's a payment from someone from France, this could be, a very strange situation, unusual. That's why they would be checking like, hey, where's this payment coming from? You can just show them it's a loan, peer-to-peer loan, fully legal, everything is clear. So you can do this. You can download it from the loan actions menu on the loan card.
Perfect. Then the next question was, are you able to deposit your own Bitcoin on Firefish and borrow euros against it? So taking out the peer-to-peer and being the investor and borrower at the same time.
So you mean like one user, the same user would be borrower and investor?
Exactly.
Yeah, that's a very interesting one. I don't think this could happen because technically on the platform you are not able to accept your own loan request, in other words. So you can be both borrower and the lender, but you cannot actually accept your own. So if I send my a loan request, I want to borrow 10,000, I cannot take it as the investor. That's not technically possible.
Okay, cool.
Just wondering why a person would do it, but yeah.
I mean, trust in yourself. I guess that's the best.
Oh, yeah, exactly. I mean, like, yeah. And then you default on your own loan, right?
Yes. We also had a question that was sent in previously, and let me just get the screenshot. I don't want to call it an accusation, but it's about the escrow, and I think you explained it briefly. They mentioned that Firefish operates as a 2 out of 4 multi-sig escrow-based loan platform, which raises concerns about potential collusions between parties. Something about their Oracle, very technically, I'm not going to get into this. With you guys being a registered entity with no interest in rugging or anything, they know this. Is it truly a 2 out of 4 multi-sig with the escrow, or is the multi-sig itself also secured further? Is there an insurance for anything like that? If you can maybe also give the breakdown of how these escrows work in simple layman's terms.
Listen, I mean, I don't know where this information is coming from. It's definitely not 2 out of 4. I mean, there are definitely different models for building escrows, but I mean, we are pretty transparent. You can find it on our website, on our document hub, like where there's full description of how the escrow is constructed. It's 3 out of 3 actually, where the borrower has a key and they're pre-signing the transactions at the beginning, right? So it's a different model. What I would recommend is really, if you really want to go into the technical details, go to the document hub. Everything is really described how the process, the escrow works, but it's not 2 or 4 or nothing else. It's 3 out of 3 with pre-signed transactions.
And the other question regarding the multi-sig, I guess, or I imagine that was the 3 out of 3 multi-sig mentioned in the presentation earlier. How do you guys internally also secure this? Or if there was a misunderstanding from that end?
What would you mean by securing the multi-sig?
I guess the questions is like, is there a multi-sig between like 3 co-founders, everyone in the company? Is there an outsider or something like that?
Right. No. So, okay, if we go into the details. So the 3 keys that are there, and they are only sort of used when the contract is being set up at the very beginning. So the borrower would basically create the escrow, pre-sign those 4 transactions, which are the repayment, default, liquidation, and so forth, as we described. And then there are 2 keys that are held by what we call oracles. So oracles, there are 2 types of oracles. One is saying that, yes, the payment between the banks has been confirmed, so has happened. So that's what we call the payment oracle. Once we get the confirmation that, for example, borrower repaid their loan, the payment oracle just signs the transaction which sends Bitcoin back to the borrower, right? So again, they can't send Bitcoin anywhere else. They only say, okay, yeah, I got an information from the lender that the loan has been repaid. So I'm sending, or I'm signing a transaction that sends Bitcoin Bitcoin back to the borrower. And then there's the price oracle. Price oracle is the one for the price liquidation, right? So if Bitcoin is basically, you can imagine as a index of multiple exchanges where we see the price of Bitcoin, because we need to know when the liquidation level would be hit. So we are taking the price of Bitcoin. Once Bitcoin hits the liquidation price, the price oracle would sign the transaction that sends Bitcoin to the liquidator. Again, I guess what is very important to again stress out or underline is the fact that there are only two ways where Bitcoin can be sent from the escrow. It's back to the borrower or to the liquidator. So there's no one else, there's no other way of how you can technically actually send your Bitcoin. So it's enforced by the network, enforced by Bitcoin script. There's nothing else you can do with that.
And then in terms of liquidation, what if there is an event occurring where Bitcoin drops very fast, more than 45%? Is there a timeline or a certain time lock to top up and to lock in more Bitcoins that you don't get liquidated?
Yeah, so a couple of things on this. Firstly, as I mentioned, what we are also trying to avoid a flash crash or a venue-specific technical glitch or something like that, right? So we're taking 8 or 9 actually data feeds, sources of price. So if one exchange goes down or two, that wouldn't impact our price index. So that's very important. So even a flash crash on one exchange, wouldn't happen. Legally or technically, if Bitcoin really falls, let's say 50%, the liquidation is considered done, right? So you as the borrower, you have a couple of options. First and foremost, you will receive margin calls, right? So, you get like 1, 2, 3 margin calls saying like, hey, the health of your collateral is decreasing. Secondly, you can at any time top up your collateral. That takes like, 1.5, 2 minutes just to send more Bitcoin. And thirdly, this is something we're actually working on and planning for the future. As you mentioned, is there any time window that I could use? Because what if Bitcoin never goes back, right? What if it falls 55% and never goes back, to the previous level? So the investor would actually be hurt. So we need to ensure that both parties are treated the same way. So once the liquidation level is hit, it's considered done. But we are working on something what we internally called liquidation protection or liquidation insurance, where you would actually get like a couple of days protection period to deposit more collateral so you're not liquidated. At this point in time, once the liquidation level is hit, you are considered liquidated.
Brilliant. And then there's one question, is the platform also available in German? I will let you guys answer this, but we will also do a German webinar, so basically the same thing in February. So if you know any German speakers or you are yourself a German speaker, make sure to watch out for that announcement. But I guess you can also change to German.
Yeah.
Natürlich. It is available in German. We also have the document hub translated, and that's thanks to Finn actually. In his free time, he's translating platforms apparently. So we have our document hub with all the description of the protocol, the features, and frequently asked questions. All those questions that we've received so far are the FAQs, so they're all mentioned there. Also auf Deutsch. So yeah, definitely available.
Perfect. Let me just go through there my notes also. Will there be a flexibility in setting a custom LTV ratio for borrowers and longer loan duration than your standard terms?
This is a good question. I mean, we're definitely fiddling with this idea, but if you can imagine, I mean, we launched the platform in the plain vanilla and most simple and standardized way, right? We could start playing with the LTVs, with different parameters of the loans, but then it would be a little messy on the platform, right? So you would need to not only check interest rate, the loan amount, but you would also need to check other parameters. So then it would get into much more complex manner. Technically, it is possible, but in the current setup, we don't see that it would bring, in other words, more downsides or more kind of complications than benefits. But we are potentially considering for the future something in this space of being more flexible, as well as with the longer tenors. With the longer tenors, the tricky thing is, the longer tenors, the less popular they are, because on the other side you have an investor. So people, very popular loans were like 3 months. You can borrow money at 7% for 3 months. For 18 months, you would really need to go with the interest rate a little higher, because on the other side, there's a person that is committing their money for 18 months. And, humans naturally, they want to just kind of give away their money. Obviously, once you start playing with the platform more, you get maybe more confidence and we'd be happy to provide longer terms. longer term loans. But for the time being, we limited it 18 months. Definitely, we are working on also additional sources of liquidity, not only peer-to-peer, where you have to basically retail people kind of interacting, but having a, let's say, institutional liquidity, which then will bring more flexibility in terms of tenors, in terms of also the LTVs and so forth. So we're working on this.
Is it possible to roll over loans at maturity?
At this point in time, again, the tricky point is that there's a counterparty that you actually have a loan agreement with, right? So that party would need to accept that, okay, I'm fine with rolling over. So for the time being, the way people would or users would normally roll over their loans is that before the maturity of their loan, they would actually take another loan and use the proceeds to repay the previous one and then keep on rolling it like this, right? So you would need to actually have twice the amount of Bitcoin, which is the downside, but you can actually do it like this, right? So I open a loan before the maturity, let's say 1, 2, 3 weeks, I take another one, and then this money I'll use to repay the loan, and then I keep on rolling it like this for the future. But also with institutional liquidity, we are planning to launch also the automatic rollover, let's say when you're going to have a longer term loans. Definitely, there's big demand for that. But on the peer-to-peer, really retail to retail model, it would be pretty complicated.
And then, very interesting question. Is it possible to do it with USDT or USDC without banks? I guess they saw the USDC handle in your live demo.
Yes. USDC is coming very soon. So we'll be launching and informing everybody.
Perfect. And are there any issues or risk under the new MiCA regulations?
Next question. Well,
I would have had the same answer.
Yeah, I mean, in terms of regulation, look, I don't want to go into too many details. We are definitely working with our lawyers looking into this, because if you actually think about it, Firefish actually doesn't hold your Bitcoin. So we are not an escrow provider. We are literally just a software or a platform or a marketplace operator, right? So we do not process your fiat transactions. We do not process your Bitcoin. All these transactions go beyond Firefish. So there is a chance we might not necessarily need MiCA, but we are proactively working with the central bank here in Europe and trying to understand, how to make sure that we are, if we have to be, that we are compliant with MiCA. So working on this.
Perfect. And then I'm going to go for 5 more questions here. Will you support Lightning to receive collateral? Would it be possible to similarly lock Bitcoin, since that isn't UTXO based?
The current setup of the protocol would not allow that, right? So we did get a couple of questions, but we would need to really rebuild the whole protocol. So for the time being, we're focusing on different things.
Perfect. And then, because you probably spoke about it before, there was a question, when app? I guess that's a mobile app or anything?
Actually, yeah. So with apps, I mean, this is, ask any kind of Bitcoin company how easy it is to get their app into the App Store. Like, building an app is not the problem. The problem is, getting Apple and Google approving it on their App Store. So for the time being, we are not planning to launch like a native app, but the app is actually, or the platform is built on what we call, or what's called progressive web app, so PWA. And PWA actually helps you to download the app as an, if you go to the website on, let's say, on Safari browser on your iPhone, you can actually download app or Firefish as an app actually onto your desktop, right? So this is possible. We have it actually on our Discord. There's a little guide how to do it, but it's possible on both iPhone and Android, and the platform works really smoothly and seamlessly, just like on the desktop. So that's the hack that I would use. Yeah.
Yeah, the whole submission to specifically Apple is quite annoying. The Google end is a little bit more. Yeah, I'm not gonna go into more of that, because otherwise we'll be talking like 2 hours as well. What is the best way to determine a good interest rate? And on the second hand, did they understand correctly that the minimum interest rate is 6%, or does that depend on how long your loan is?
So it is a marketplace, so you can actually choose whatever. Yes, we are limiting the interest rates. They are fixed from, I think, 6 to 15% or 13%, right? So it wouldn't make sense if people started posting their 1%. I mean, no one would ever execute such a deal, or 27% as well. So we are just physically limiting the range, but then it's a marketplace, right? So depending on your preferences, you can set up the rate as you want. But obviously, if you want to make sure that you're gonna get hits, so there's going to be investor interested in your deal or in your offer, in your request, it's good to look into the marketplace and look at the past deals, and also look at the current offers, right? So if there, for example, for 6 months, there's five deals at 10%, and you're gonna add their 6 months at 3% or okay 7%. Obviously, investors wouldn't choose your deal because the interest rate is lower. So always look into the marketplace before you're submitting the request to make sure that you're gonna get matched.
Perfect. What is the timeline of the zombie apocalypse happens? And in this case, Firefish doesn't exist anymore. I don't know if this question has been answered. Maybe he joined a little bit later.
Yeah, I don't think I mentioned that. So basically, the way it works, so if Firefish disappeared, you still have a bilateral agreement or a legal, basically, agreement with your counterparty, right? So what would happen, for example, Firefish disappears, and then no one is able to kind of send your, or in quotes, no one is able to send your Bitcoin back. 1 month after the maturity of the loan, you can broadcast the transaction, and it will send your. I mean, you can broadcast the transaction anytime, but it's valid only 1 month after the maturity, right? So if everybody disappears 1 month after the maturity of the loan, you can broadcast the transaction, and Bitcoin would be unlocked.
Perfect. And then last, very important questions before we also have an exciting announcement with Finn and I. Can we get some Firefish gummy candies again?
Oh my God. Someone obviously visited our booth at the BTC Prague, I guess. So yeah, I mean, wherever we go, we always bring the super spicy gummies with us. So, find us on any other conference, and we'll definitely make sure the gummies are there.
Perfect, perfect. And for anyone, if your question was not answered live now, maybe it was like one of the regular questions, you would definitely find them in the docs, as Igor and Finn mentioned. Or obviously, you can also always contact the Firefish team. You also mentioned the Discord server, Igor. So there's ways to get into contact with you. And I would then now leave it to Finn, because we also thought about something interesting, because you guys even went a step further than the webinar today. And you actually also worked on a book.
Yes, we do. Together with Brains, the oldest mining pool in existence, who mined the most Bitcoin from every mining pool. So we did a book. It's already published in English, if you can speak English, so I think you can. Then you can just check out the website on Firefish. There's a link to our free PDF document for the book, Bitcoin, the Ultimate Collateral. And there we explain basically why Bitcoin is the ultimate collateral, why rich people don't sell their assets, they borrow against it, how Firefish works, and also a quick summary about the book in memes. That was my favorite part, I think. And we're also doing this in German. So we're currently working on it, doing it in German. And I think that the release will be like around, we're doing the next German webinar in February. And I think that we can speak more about the German version, but it's currently in development and it doesn't take any longer. But you can, if you want, you can check out the English version right now on your website. So it's for free. Just check it out.
Perfect, perfect. And for anyone adding more questions, as I mentioned, if you have any questions with the Firefish team, probably join the Discord servers or check out their social handles. You should also have my email if you have any questions and you don't reach the Firefish guys, because I don't know, maybe they're off or something. And you can always email me there and I can get you in contact. And for anyone who didn't join live, I'm gonna upload this tomorrow on Thursday, roughly in the afternoon. We didn't have too many cuts there, so it should be done quick and easy. And if you speak German, we will then see you in February for the next webinar. And for anyone joining live now, that's the end of the webinar at this point. And I also want to thank you, Finn, and you, Igor, for your insight. And yeah, I'm looking forward to then speaking German with you, Finn, in a couple of weeks.
Ich auch.
Thanks a lot. Thanks for having us. Really appreciate it. As mentioned, any questions, feel free reaching out to us. And yeah, we'll be happy to answer our questions.
Perfect. Cool. I wish you then a very good evening. I hope you guys get off from work and enjoy Prague a little bit. And because I heard Finn is maybe or maybe not in the office.
Yeah,
And yeah, for anyone joining, I'll see you in the next video or at the next event, as we mentioned, with BTC Prague.
Auf Wiedersehen.
Thanks a lot. Keep
Perfect.
stacking. Cheers.
Bye-bye, guys.
Bye-bye.
Bye.